Hey everyone, welcome back to another video. Today I just wanted to do a general market overview for both the stock market and the crypto market. And when we look at the SPY, uh, we did reach new all-time highs today. We were in this consolidation zone for the past couple of weeks since July 23. And when we have consolidation zones like this, we tend to have people saying that we're going to have a correction soon, or we have people saying that this is a consolidation zone before we go a lot higher. So most people's eyes, this is either a setup for a big move down or a big move up. And so if we look at what happened at the VIX today, we were kind of making a higher low structure, but now we seem to be rolling over in VIX, indicating that we will be seeing a much higher SPY. Maybe not much higher, but uh, definitely no imminent pullback for the next week or so, at least on the short term. And if we look on the VXX, which is also a indication of volatility, seeing new lows shows that, hey, the market should not be worried about a pullback anytime soon, or maybe for the next couple of days, and that we should be confident to say that we will be seeing some sort of new range that the SPY will be trading in. If we look at the dollar has been going pretty strong for the past couple of days. It may started making the surprise rally back here in June, and despite this little pullback we had, we recovered pretty well, and now we seem to be approaching the resistance of this zone over here at 93.5 and 93.18. So good news for the dollar. And when we look at what the bond market is doing, it seems that the bond market has the recent rally has cooled down a bit, and now we are pulling back. We are to see if this is some sort of pullback or a general reversal, and we will head much lower. And this is TLT, which is bond prices, not yields. So if we look over at emerging markets, it had a massive pullback, and now we seem to be in this consolidation zone. We'll see what will happen. When we go look at gold, we had this giant flash crash a couple days ago that made everyone scared about their gold and inflation position. There, it's hard to say if you could even call this a rally. What will happen is yet to be seen, but we do seem to have been going on this downtrend since the beginning of for the last year, since last August. So if I were to draw this chart for you, kind of looks something like that, right? Like lower low, higher lower highs. So overall, this is pretty bearish, even though we had record CPI numbers and all of that, all the stuff going on with quote unquote money printing from the Federal Reserve. Gold has been selling off, which is no bueno. Same thing with silver. Silver is kind of like a proxy for gold. It's kind of like how Bitcoin and there's Ethereum, so same thing for silver. Crude oil is pretty interesting. As you can see that there is this long-term range for crude going all the way back since 2008. And yeah, downward trend, right? These are just general lines, but right, lower lows, lower highs. And what we've been doing the past couple of days is that we were going strong for the reflation trade, the economic growth, the economic rebound, strong employment numbers, and then somewhere around July 14th, we started pulling back, did not manage to break new highs, which is extremely important. And now we don't know if we're going to head down lower, but it is interesting to see crude oil head down lower at the same time when gold is going down lower. Now looking over at something interesting that I've been seeing is here on the crypto world. We're just going to go over Bitcoin really quickly. If you follow this channel or my Instagram, you know that we just bounced off the 50. We broke over the resistance, and now we're probably going to consolidate around the 50 zone. And then from there, we're either going to pull back, which we did in the past 3 times, here, and here. I said this like a million times. So you could go check out the videos from the past if you want to go check it out. But yeah, we don't know what we're going to do from here. So August is going to be the power month that decides what we're going to do. I should say August and September is going to be the power months that will determine if crypto heads back to, let's say, like 15,000, 20,000 for the next 6 months, or if we're going to go back to new all-time highs and probably reach the market cycle top, maybe by year's end or next January or February. So Ethereum going strong. Past couple of days, we had this giant rally, so now we seem to be making this consolidation zone, kind of cooling off a bit. So Bitcoin went above the 200-day moving average, and now we are yet to see some sort of real pullback or some sort of rest in the price action after this giant bullish rally. ADA has been kind of surprising. ADA made this great move today. So while Bitcoin and Ethereum are down, ADA is actually up. Must be some kind of news, or as you can see, this chart pattern right here: green, red, green consolidation zone, and a breakout over from the 1.5 level, which is a psychological resistance too. Let me just go check out crypto market cap, see if other coins are rallying today. No. Yep. So basically, except for this ICP, the entire crypto market is pretty much just down. So something must have happened with ADA. And actually, let me go check this out really quick. This is something I've been looking at, or I've been hearing about for a while. ICP. I have no idea what this is. Chart's pretty trash though, but I guess it could reverse. Okay, so ADA looks good on the daily. On a monthly, looks extremely good. If you just go look at this right here, I mean, that's extremely bullish. We're just bouncing off of previous high pretty much. And now when we see these wicks, shows that there's a lot of bullish momentum. Same thing with Ethereum pretty much. It's not as perfect as ADA's, but then, you know, seeing these wicks and this consolidation zone. So like basically the way Ethereum works is that you would see this giant move, and then you see this consolidation zones with these long wicks on the bottom. That usually is a setup for another big move. So that's kind of so imagine this section right here and kind of just visualize that over here. Remove this. So big move, and now we're in this little consolidation zone, something like this. So whether we roll over, go back down to new lows, or if we go back all-time to new all-time highs, in my eyes, it matters very little. Within like a year or two, Ethereum will be a lot higher than where it is now. But my bias is that I do like ADA more. So now let's just go over to this site, look into Bitcoin. If you watch the videos, then you know that this red line is very important, that this is pretty much going to be our next market cycle peak or local peak. And seeing it go from when we first dropped down, it was like 58,000, and it's been steadily increasing to 66,894. It's good news. So basically you can imagine that the way I see it is that this is going to be the top. This is the most Bitcoin can go before we go back down to real bear market. So pretty much is the same principle as, you know, back over here, this line was like $5, and then over the next couple months, it's at 30, and that was our resistance before we rolled over. This back over here was like $90, and it managed to slowly creep up to $200 before rolling over, and so on and so forth. So, and then we know that there's diminishing returns and diminishing volatility in Bitcoin. So the speed and the percentage gain that these lines will go in the next, these lines will increase within the next couple months has been decreasing. But if we look at pretty much what Bitcoin did last time, it peaked at like 61,000 at March. And if you look at what it did 7 months ago, before that, it was September of 2020. So you can imagine this is the length. So this is the farthest. You can imagine this would be like the farthest that Bitcoin could go. And so we reached it here, 35,000, but we managed to get all the way over here to 60. So from around 26,000 over here to September, 7 months later, being at 62,000. So 2x in 7 months. We could be doing something similar. So if we look at this right now, 66,000 if it doubles, it's around 120,000, and 7 months from now would be next year March, which is kind of what kind of like where I think the market cycle top could be, around next year March, April, May, June. So this is the key thing to look at, and looking at the slope of this line, seeing if it's like increasing or decreasing, is also extremely important, because the moment we start to really roll like this, the moment we start to roll over like this, right, so we were increasing this whole time, and then the moment we started actually decreasing the slope, that's like, oh, okay, Bitcoin's really screwed. So you can see the same thing with over here, like the moment you see, right, slope is pretty fast, and it gets slower and slower and slower, and when you see this downward negative slope, that's like, oh fuck, we're screwed. So same principle here. And I just wanted to go do a quick look at the log curves. Very good indicator at figuring out where the true tops of the market cycle is. Another reason why we probably are not at the market cycle tops, because we haven't hit this band. And so this is just a mid-cycle pullback according to prevalent theory. And so it's very interesting to see how we'll react. So if you look over here at 2013, at this double cycle because this is a low, first peak, second peak. So double cycle peak. When we pulled back, we went from the second, so if we go at this middle yellow band as a reference, we went 1-2 above it, and then we went 1-2 below it. If we look at what we're doing now, we have the same band here. We were 1-2 above it as resistance, and we went 1-2 below it as support. So yeah, we could be doing something similar to this. And so if you look at what the little recent rally we were doing from the 50 weekly moving average bounce, it could be something like this. Then we would be like somewhere around here. So that's the bullish. I have a video on that. We have the bullish case where it just kind of shoots right back up. So if you actually look at the timelines of this, it's actually quite similar, like in that we peak at March, and then we hit the lows of July, and then now we're rallying in August. We would go back over here, we peak at April, right, kind of close to March, right. We go on the lowest in July, and we start rallying again in August. So this is what people think by year's end we're going to copy and paste what we did in 2013, and then go from $100 to 1,001. So that's a 10x. We're probably not going to 10x. So if you look at, remember the red line that I just showed you here. And how 7 months from now it can double to 120,000. That is also, the confluence of indicators is very important, because when we look over here, the top of this band is around 140,000, right? And that's just for November. I mean, imagine what it will be like over here in like next year March. So still got some room to go, and it'll be exciting, because on bullish case we go to 140 or greater at the end of the year, or we're going to kind of stay in between these two bands for a long time, and then roll over and then go up a bit higher. So it's important to not think deterministically, but in probabilities, and not trying to predict the market constantly, because chances are you're not that special and you probably will lose. So I hope this video was useful to you guys, and I hope you guys like and subscribe, and I'll see you guys next time.